Welcome back, everyone, to the program. My name is Jeff. My little Twitter thing is right here. I remember which shoulder to point to. Scrolling across the bottom is about our newsletter. Drop us an email. You'll be signed right up for it. And of course, if you like this kind of content, I really appreciate it if you hit like, share, subscribe, hit the notification bell. Really helps out the channel, helps us grow. Today, I'm talking about something that's like there was a big drop in Bitcoin over the weekend. Okay. Relatively speaking, a lot of alts move more, but Bitcoin, some people called it a crash. It moved about 10%. That's technically not a crypto crash, but a lot of people like hyperbole, like to make a big deal out of it, but it happens. Okay. But it's interesting, the timing, and also with other news events that are going on, with not just world news events. We know lots of things are happening this past Saturday as well, but a lot of things are happening in the crypto world as the Bitcoin halving coming in about a week, about the 19th to the 20th, depending on how the clock falls and how fast the blocks get built between now and then. And also we have all the ETFs that are gobbling up Bitcoin like crazy. So there's lots of things going on. I mean, there's allegedly Japan's going to jump in here as well. ETFs, that'll be another story for next time. But today I wanted to talk to you about how a whale could be manipulating the markets and using the exchanges to their advantage to get Bitcoin on the cheap. Now, it's a little complicated, but there are rumors that this has been done and continues to happen. Now, full disclosure, I'm not a whale and I don't condone this, but I'm just telling you how this could be done on a big scale or small scale project. So let me share my screen. I'm going to share those of you who have not seen an exchange order book. I just want to share what this looks like and try to explain it just a little bit. So let me share my screen real quick here. So this is right from Coinbase's homepage. Okay. So I went to Coinbase and let's see. So if you go to Coinbase's homepage, this pops right up, and let's see the Coinbase. Yeah. So I'll bring that over here as well. So let me share that as well. So just so you can see, if you want to find this particular image yourself, jump over here. Is that working? I think so. Yes. So this is from Coinbase, right? So if you go to pro.coinbase.com, you scroll down and you got this image of the trading. Now I try to open it up. This is their trading platform, the trading exchange. You put in your orders here on the left and you do stuff on the right. But I'll open this image up in another tab to make it a little bit larger. And I wanted to highlight some of the things. And if you haven't seen one of these, it might help to know this a little bit. Now, this is obviously dated because Bitcoin's around $10,000 in this image, but the book is still the same. It's staying, the mechanics still work. Over here is placing an order. You can deposit or withdraw your money. You can put a buy order, sell order, put a limit order in. But the important thing here to note is what's called an order book. Now, the red is people that are trying to sell, and this is the prices they're trying to sell at. And green is the prices they're trying to buy at. Okay. Now, the reason that this is interesting, and you can see it kind of mapped out from the current price all the way down to a certain amount to the left or the right based on the number of, the number of orders. It kind of adds up. That's why the chart stacks up to the left and to the right. So looking at something like this on Coinbase, you could see basically how many Bitcoins you would have to buy based on the current book that they have to move the price up by a certain amount or down a certain amount. So I'm going to take this line of 300 right here. If I wanted to move, if I bought 300 Bitcoin based on this chart, I would be moving the price up to say around, I'll be moving it from 10.3 to 10.4.5. Okay. Coinbase has a very big book, so you don't see that much, but you don't see that much price movement. But I'm going to drop out of my screen and just explain this a little bit. So just imagine a company. I'll just make one up. Let's go with Gray Boulder. Okay. All right. So Gray Boulder has a lot of capital and they want to buy a lot of Bitcoin. Now they employ a bunch of buyers, maybe third parties that they work with, whomever, but they've got lots of buyers constantly saying, their instructions are buy me some Bitcoin on the exchanges when it's available. Don't go crazy with it because then you'll drive the price up. You buy a lot at once, the price will go up. But if the price dips, buy the dip. Okay. Now, they may also have other instructions to go on smaller exchanges and to try to drive the price down. Now, what would that mean? Well, imagine you go to you look at an order book and it's much thinner at a smaller exchange. And I'll explain why you want to go to a small exchange in a moment. But you go to let's go, you say you go to a thin exchange and you just say, if I sold 100 Bitcoin, I would drop the price of Bitcoin. If I did it all at once, I would drop the price of Bitcoin like 10%. Okay. Now we've seen flash crashes before happen. There was another one a couple weeks ago that just happened where somebody fat fingered their order and they sold a couple hundred Bitcoin at market and the price dipped to like under 10,000, then jumped right back up because the orders were there just in case. It's like, there were standing by orders. Like if Bitcoin happens to get under this price, buy me some. That's typically what happens. But if you do it slowly and you let the market catch up and you're basically buying out the book, what you can do on a smaller book is you can drive the price down semi-gradually and just sell to get down 10%. And then what you do, what's called wash trading, which is you basically buy and sell at that new price back and forth to try and keep it there. So you're the buyer and the seller, or you may have a partner that's the seller and you're the buyer, and you just keep that price there for a little while to try to establish this new baseline price that you've established by selling and dumping some Bitcoin on the market. Now, none of this, I believe, is illegal in the world of Bitcoin. It's questionable. It's probably, it's highly questionable. It's not a good practice. I mean, it's almost as bad as pump and dumps, but this happens, okay? But let's just say you could take 100 Bitcoin and sell 100 Bitcoin and drop it 10%, and then you trade back and forth with yourself to keep that price there. Now, why would you do this on a smaller exchange? Well, all these exchanges have bots that look at all the different exchanges, and they'll look for what's called arbitrage. They'll look and see like if Bit Donuts or Bit Bonkers has Bitcoin at, like, if I'm selling it for 70,000 and they have it for 65, why is that different? And should we move our prices, or should we encourage the prices to level out? Now the bots try to trade to keep all the prices, the different exchanges, the same. So if one exchange starts to dip and stays that way, the other exchanges, even though they're larger, will try and keep up or down, as it were. So if Gray Boulder issues a campaign on a Saturday and drives the price down 10% and tries to keep it there, other exchanges will notice that and try to keep the price or move the prices of their marketplace down to that same level to wash out the arbitrage, so they're not buying on one exchange, moving it over and trying to get a net profit by selling on the other. So it's kind of like if you bought something for $4 at Walmart and returned to Target and got $5, right? That's the same kind of idea. So that's what they're doing. And again, you want to do it on a smaller exchange because it takes less Bitcoin to move that price. And then when the other markets wash out, you have orders on the other markets, say Coinbase, where there's a lot of liquidity, to buy at that newly established price. So for example, let's say the price is 70,000 and you do what I mentioned earlier and you knock the price down to 63 on the smaller exchange, and then you try and keep it there. And then Coinbase and other exchanges try to keep it. Now they try to move their marketplace from 70 down to 63. Now you jump in with all your buyers and your horsepower and all your whaleness, and you start gobbling up the Bitcoin at this new price. That's how they manipulate the market. So you could sell, say, 100 Bitcoin in the smaller exchange and buy for 70 down to 63 in the hopes of getting it for like 1,000 or more Bitcoin at 63, the new established price on the other exchanges. That's how they do. That is one potential way that whales can manipulate the different exchanges and the different marketplaces. I didn't even mention over the counters, but they might notice that this is kind of weird too. But for automated market makers and automated traders and bots and exchanges that are automated and no one's really shepherding the prices there, this is how they can move a marketplace on the exchanges, use the exchanges against themselves by aggressively trading on one and using the fact that they all try to interlink and match the prices on everyone else and link them together and make a lot. So you could sell, 10% of what you want to buy on the small exchange, and then gobble up 100% of what you wanted to buy on the other exchanges once the discounted Bitcoin price is established. So, and again, there's lots of buying pressure now. That's why I was saying all over Twitter. If you're not following me on Twitter, jump on Twitter. Follow me. It's right here. There we go. But I was saying, like, the price is going to come back. Like, this is not a flash crash. It didn't just like drop and come right back in a few minutes. But I said it's going to come back probably this week because there's so much buying pressure from the ETFs. The ETFs are buying up 1,000 Bitcoin a day easily. 10,000 Bitcoin a day. 11 times what the miners are making. And then the halving happens on the 20th, less than a week away now. And then that's going to cut the supply in half, which means ETFs are buying 20 times what the miners are making each day. Plus, we're now going to add other countries that are establishing ETFs for Bitcoin too. The buying pressure is really there. They just want to buy it as low as possible and keep that price down. So this is one thing that this is one method they do it. I wanted to let you guys know about it. What are your thoughts? Leave it down in the comments below. Let me know what you think about this idea. Have you heard about it before? Did I explain it well? Leave a comment down below. Again, like, share, subscribe. Send this video to somebody that needs to know about this or wants to hear about it more. Happy to talk to them as well. But with all that said, I'm going to leave it there for now, and I'll see you in the next video. Take care.